The crypto comeback is inevitable. Today I'll break it down for you, what this could mean to the market. Let's just get right into it. I do want to thank our sponsor. That is iTrust Capital. This is where you guys can get involved in a crypto IRA. Set it up over there, buy gold, silver, all sorts of assets when it comes to digital. And of course, the opportunity to get your crypto IRA is a huge tax benefit. Always consult your tax person to make sure it's right for you. But you guys can get up to $100 in funding just to get started there. And of course, using our link down below. One big news item from iTrust was that they announced USDC now available at iTrust Capital, and they're paying some yields on it. So you've been wondering if you can put stable coins in there? Well, there you go. This is a great opportunity, of course, right there within the iTrust Capital app and platform. So check it out using our link. Let's go over and kind of lead off here with a few points I want to get at. Of course, speaking of gold and silver just wiped out Bitcoin's entire market cap. What we mean by that is that we saw one of the biggest reversals in commodity history, and this is in less than 4 hours. Gold and silver erased 1.7 trillion in market values. And of course, I always look at this and know what's going on. You guys understand, this is just games being played within the market, but does this syndicate or indicate that we are nearing a top? As you look at what's going on in the market overall with crypto, of course you have to look back at where we have been. And if you go all the way back to a year, that high right there, 10.7 before the big dip, 4.1, 4.3 trillion. And here we are hovering right now at around 2.9 trillion, under $3 trillion. Of course, this means, guys, that are we near the bottom? Is this the opportunity for crypto, Bitcoin, all these digital assets to truly make a comeback and get in the right place at the right time? If you look at the history, a little bit surprising over the last 12 months, we saw silver up 267%, gold up 84%, copper up 38%, NASDAQ 22%, S&P 16% on the S&P 500. That is unbelievable in these market conditions of what we're seeing right now. Market is going strong, and of course we've continued to see the Trump administration talk about this, is that they think this is still, the golden years are yet to come. Maybe they see something with, of course, crypto coming in. But Tom Lee has another take on the commodities. Take a look.
And as you know, like when you look at extensions like this, it's dangerous to fade it because you don't know how long it will go. But you're right, a parabolic move probably marks the end of the move, not the beginning of the move. So it's a good question of like timing, but it sure seems like commodities, especially precious metals, needs to have a place in people's portfolios. And it's hard to tell how much of it is geopolitical uncertainty, dollar and currency weakness versus dovish central banks. But maybe if it's all three, that explains why gold's done so well. I don't think that those are bad for equities, because if this is anticipating dollar weakness or more dovish moves by central banks, then it's good for asset prices. So I almost think the gold move could be sort of a glimpse into sort of risk appetite growing for stocks. The tariff headwinds disappearing, but now if we have dollar weakness, I think it puts more upside to the earnings story. Investors aren't necessarily paying for that right now because multiples have been compressing, but I think it really helps anchor stocks. So between now and the end of the year, I think there can be a lot of reasons for speed bumps, but I think as we exit the year, the earnings story is anchoring, I'd say, upside to our 7,700 target.
All right, let's take a look at Bitcoin silver real quick, and you can kind of see it is at a very pivotal point right here, holding it around 1.397. And if you look back at some of the other pivotal points from all the way back to 2021, where we saw that bottom come in around the end of December of 2022, and then of course the skyrocketing in Bitcoin, maybe that's where we are right now when you look at where silver is. Do we get that rotation of capital? The question is, if you overlay the value of the Dixie on top of this, take a look at that, because this is something that we haven't seen in correlation to the dollar value in some time. And remember, the lowest trend that we saw on the dollar was all the way back to 2008. 21 was another dip that we saw, but we haven't come back to that level yet. So it is something that I think will continually push assets up, especially in this environment. Here is Mohammed coming in from CNBC. He basically says contrast continues between relatively calm markets in Asian trading, yet more economic news with the U.S. increasing tariffs on South Korea to 25%. This came off of a 100% threat And then, of course, right after that, Korea says, well, wait a minute, hold my beer. The market just absolutely boom, because you have Trump doing these swings of going from 100% and the market is hit, and then there's traders out there, but you've got to be able to kind of see where this is heading. And Korea, of course, started to take a little bit of that all on taco, which is Trump chickening out on some of these executions. I want to go to another clip real quick. This one, of course, is talking about, is this good for investors or traders when you have these kind of market swings like this? Take a look.
Is every day Taco Tuesday now?
Suddenly everyone's no longer as worried by these tariff threats. Now, it's really important before people get too carried away that, hey, wait a sec, if 25% tariffs on Korea got a 2.7% gain, what would happen if they got 100% tariffs? We need to emphasize that the extraordinary gain in Kospi here was really because the market is very much dominated by a couple of stocks, and one of them is SK Hynix, which surged today. And therefore, that kind of points to the fact that the AI theme is still ultimately what's really driving everything in markets over the last year, not so much the geopolitical noise. The geopolitical noise causes all the disruption, and that's what traders need to care about. But for long-term investors, they need to care about the AI theme, and that's what's driving the Kospi.
All right, so you've got it there. This is something that's really good, I think. Well, if you're playing it as a trader, you could get easily stopped out on trades quickly with these kind of rash decisions that are coming out of the White House that affect major global markets. But if you look at this long term, I think a lot of players and investors are saying, let it settle down, see what happens in 30 days, 60 days. And that is something that starts to benefit you because holding assets, what we've already seen and just showed you guys, pretty consistent right now in the standard markets. If you look also into how does this affect other countries, well, coming out of Davos, we started to see a lot of activity. This was one of them. These were details of a historic trade deal between India and the EU have emerged. Remember, the EU and India were never really big trading partners. They have been working on this deal for a very long time. And now the EU is looking at it. We're going to open this up wide open. This is going to bring a lot of goods and services into the EU from India. This, of course, could be good for that portion. But I think this, again, is still one of those scenarios where the EU is really trying to do everything they can to stay relevant in the global stage. This is a good thing because it partners with one of the big powers overall. We'll see how it comes together. Other things you have to kind of look at. Donald Trump deserves some of the credit on this with his adventurism. He's now pushing a lot of people into deals like this, which of course is what we're talking about here. Does it alienate allies? It's still yet to be determined. I think the key here is the United States still is the global power that a lot of people are trying to coordinate with. It's still one of the best, if not the best, markets in the world. It has the most innovation. The key here is, can it hold it? And what is Trump's strategy going forward? Because this gets into some very global shifts that are occurring if you think about it. Now let's take a look at what this might impact in terms of the dollar. This is the U.S. dollar potentially dumping hard. And there's a little bit of issues that are happening where we've seen these rate checks. This, of course, always coming out of the stress that we've seen with the Japanese yen. But here's something that was new, and that is the IMF also confirmed that it has now stress testing scenarios where there's rapid sell-off of dollar assets, treasuries, and now even going to the level of the unthinkable event. So if we saw a fast exit on the dollar, what could that look like globally? If you look at how much the dollar has really accelerated over the last few years, I'll go to the Dixie right here. Let's go all the way down here from 2011. And if you look at just the amount of movement that we've seen on the dollar all the way to the top, almost 55%, but right there is a good example of where it's trading right now for the Dixie. There's a lot of room here yet to come into that bottom that we saw in 2021. That, of course, starts to push assets into the right zone. And, of course, we all know what that means. Risk assets will be one of the biggest opportunities. So when you think about that, the dollar debasing, I won't say debasing, devaluing, you look at the stronger play that's going into assets. BlackRock, of course, is now kind of backtracking on this, saying that maybe this is the opportunity to go ahead and buy up on Bitcoin because there's an opportunity of rotation here. We've already seen the explosion on silver and gold. All of this could play right into the cards of this is the bottom. And if it were, if this is near the bottom or at the bottom, what kind of reversal could we see into risk assets when you look at the size of these markets? Asset owners are going to be the winners out there. And look at the ones that have been winning. Gold, there's XAU right there, silver, copper, crude oil. A lot of the commodities have been absolutely killing it just in the last few days, but not only in the last year. All right, so let's go over to WEF and Davos. This, of course, all finished up. The global stage, you had Trump and all of his cronies over there basically telling the EU and the rest of the world what we're going to do. And of course, there's been some pushback on that. I think the financial markets have been part of that. Here's a clip that kind of explains why we're seeing what we're seeing. Take a look.
I feel like we have a pre-Davos market and a post-Davos market. Pre-Davos, everybody's all bulled up. It's hard to find a bear just about anywhere. Now we're talking about renewed volatility, the sell America trade, gold's continuing to ramp, the dollar's weak still. What do I do with that?
I think one of the most important things that came out of Davos that was a change in language was going from deglobalization to now the phrase New World Order. Deglobalizing felt a little more like conscious uncoupling, and New World Order has a much harsher tone to it, which means that the urgency around reimagining supply chains, partnerships, and frankly, advancing AI and automation manufacturing here in the United States, along with the dollar that's now lower, becomes, I think, even more urgent. And the emergence, I believe, is moving away from the Mag 7 into what I'm calling the magnificent thematics. And if you follow these thematics of New World Order, of AI, automation, innovation, longevity, and not necessarily moving to cash, there's a convergence between corporate spending and government spending in the AI space. Mm-hmm. It's so powerful. This is not like the early 2000s when it was sort of the domain land rush for beer.com. You know, I think these comparisons to the early internet just, once again, do not hold true.
All right, so comparisons here, I think, what she's talking about is the fact that the United States kind of came in and staked down a statement that this was a decoupling. This, of course, created those trigger events that we saw with the EU and India. But there's going to be many more, and, you've heard Carney even talk about this New World Order. A lot of these major, especially the G7, are starting to try to figure out where do we land. All of this is going to kind of fall back on the Monroe Doctrine, very similar to what was happening back then, which was this, I won't say isolationism, but it definitely starts to go into this hemispheric model. And this is something Trump also talked about here recently when he was compiling a lot of South American countries and looking at what we are, and that is the Western Hemisphere. So this is intriguing because it does start to establish New World Order. There's going to be some big winners in the eastern regions, obviously in the Pacific Rim. We're going to see big winners here in Middle America and what we'll see, within Central America and the growth of the United States. And then you're going to have the eastern blocks that are going to grow outside of what the EU is. So it's a very, very interesting time because power plays are being made right now. Speaking of that, you've got Wall Street making these power plays. And this, of course, was Morgan Stanley saying, wait, we need a head of digital assets. This pushes more awareness into blockchain. Everybody's going to be using this. All the banks are going to be using this. It is just a matter of time. Here's, of course, Bitwise saying, hey, don't worry about it. We think this New World Order is going to operate on ETH. And if you look at all of the growth that we're starting to see right here, the number of public companies that are holding ETH increased 40%. That's right now while we have no clarity. Imagine if clarity comes together in the United States and what that might look like. ETH corporations accounted for 5% of ETH holdings. We've already seen what Tom Lee is doing and what he's trying to do, which is mainstreaming ETH through his partnership with Mr. Beast. A lot of things brewing right now. Now, where does this put central banks? Well, here's a clip to talk about that. Take a look.
So just remember that the banks want CBDCs and control over what corporations can and can't do with them. But they also have some competition, and their biggest competitor is the crypto lobby. Now, the crypto lobby is challenging the banks, and what the crypto people want is fair competition. Because in a fair game, crypto wins. Crypto knows that, and the banks know that. And I think you can tell that from this conversation between Larry Fink and Christine Lagarde, where she drops a hint that central banks might not always be around.
So I'm not going to tell you that there is a red line. I'm not going to tell you that central banks will always be around either.
Speak to what you did. You just said something very intriguing.
No, I'm
You
not
said
going to speak more to it.
no to no to the idea that central banks might not always be around. What did you mean by that?
Look, I went through my lot of crises, as many of you have as well. And I remember the days when it was mentioned that, central bankers are the only game in town. This is not the right approach to a balanced and durable equilibrium.
So what happens next is the question. I think if you look at Bitcoin, where it has, what's trading at 88 as we record this right now, and some change, you look at Bitcoin versus gold, and the chart looks broken, especially if you kind of consider. But if you zoom out and you kind of look at Bitcoin versus gold over history, it's a little different story. And here's Raul talking about that. You can barely see the recent gold outperformance over Bitcoin. Now, remember, this is a log chart, so it looks less dramatic. But that's the point, is that maybe there is a play here. Now, it's also to the point that we have not seen these kind of highs before with gold and silver. And this, of course, has been discovery price zones that we have never seen. So it's very possible that we could see the beginning of an era around precious metals again. We've had those before. So that's the one caveat I would place within this. But when you look at it, from 2022, peak gold down 47% versus Bitcoin, and from 2019, peak gold, it's down 85% Bitcoin. So think about that. Granted, at that time, it had never seen those highs, but it had not seen those highs prior to that either. So just interesting days right now, guys. We are very, very intriguing in terms of how the markets are playing out. So where is Bitcoin? Silver prices now outperforming Bitcoin, one of their wildest margins on record. You've seen it, and of course we saw the crazy manipulation, if you want to call it that, where silver was, but in 13 months, silver's up 270%, and Bitcoin is down 11%. You would naturally think the next play is Bitcoin and crypto. That's what we're looking at. I think this might be a question mark time. Are we nearing the end? Let's see. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.